Guys, I have a crazy announcement to make. This trading bootcamp series that I'm currently doing is going to take over YouTube. Instead of just doing the trading bootcamp series, and instead of just teaching you how to trade for free on YouTube, I'm going to be teaching somebody how to trade while recording it and then posting it on YouTube. So not only am I showing you guys exactly how to trade through showing you literally everything you need to know in trading, but I'm going to be mentoring somebody through the entire process so they can ask me questions about trading, and the questions they ask me, you're going to hear the answers to. And that is going to ultimately help your trading, as you're now knowing the answers to questions which you probably have in your head as well. This series is going to be insane. Now, by the way, this is episode number 2, and in this episode, I'm going to be going over candlesticks and showing you exactly how to actually use candlesticks and understand candlesticks in your trading so that you can actually start to understand exactly what's going on in the market. This series is going to be starting from the complete beginning. So if you are a beginner trader, this is the only ever series you are ever going to need to watch ever again to become a full-time trader. I'm going to teach you everything. You are never going to need to learn from somebody else again. And like I said, I'm going to be mentoring somebody throughout the entire series as well, which is going to be insane. Nobody on YouTube has ever done anything like this before. And if you want to learn how to trade, you need to watch the entire series, and I promise you, you will see results. There is no way you won't see results if you watch this entire series and actually make notes. Take it seriously, guys, because I'm giving you my time for completely free, and I will teach people how to trade for free on YouTube because there's demand for it, right? And I am happy to do it because I know you guys will see results if you take it seriously. So without further ado, let's get into the second episode of my trading bootcamp series. Let's go on to the charts.
All right, boys. So, welcome to, I guess, episode number 2 now of the Bootcamp series. This is Bruno. He's the guy who I'll be
Hello, boys.
mentoring throughout the entire series. And Bruno, I actually went to the same school as Bruno growing up, right? We went to secondary school together and sixth form together. And then he reached out to me saying, let me get on to the mentorship series. It'll be good to learn a bit more. And then here we are, right? So, yeah, Bruno, do you want to give an introduction into yourself as well and your journey and everything?
Yeah, so in terms of trading, I'm a beginner. I've messed about with it. So the notepad I'm going to be using is even 3 years old. I've done Candlestick Bible, which Sal recommended to me. Let's say, when we were messing about with trading, you'd already started,
Yeah.
but Candlestick Bible was kind of a free tool, which is still good. I'm sure it will be insightful, but this was where I was at. In general, warming up to this, sorry to go on. I've been looking at myself, and if I'm ready to really take something seriously, because I'm going back to uni into my second year, which is also, Sal said, it's ideal for a uni student to do this because that's how he did it. He got a lot of free time and to focus on something.
Sweet. Yeah, bro. Good stuff. Like for anyone watching as well that's in a similar situation to Bruno, you don't need to, if you're at university, don't let that limit you to not being able to learn how to trade. If you're at university, you have time on your hands. As much as you think you maybe don't because you're busy with lectures and stuff, you do. You can find the time, just as Bruno's doing now, just as loads of other traders do. You can find the time, and that's the purpose of this bootcamp series, is to teach you guys how to trade while being at a 9 to 5 job or being at uni, all for free on YouTube. Okay, so I'm gonna go and actually show you guys the charts right now, and we're gonna get into a bit of knowledge on candlesticks. Okay, and start from the very basics. Right, it's not gonna be anything detailed. It's gonna purely be starting from the very beginning and explaining to Bruno and to you guys exactly how to understand candlesticks. Right. So, Bruno, the first thing that when it comes to understanding like trading, right, is you need to understand that every the chart is made up of candles, right? These lines here, these are called candles, okay? And they essentially make up the chart. So the chart is going to be made up of candles, and you need to understand the different types of candles in your trading. Each candle represents a different time frame. So right here, I'm on the 15-minute chart, and you can also change the time frame to, let's say, the hourly. And now every candle you see here is now for the hourly chart, right? So every time you change the time frame on your trading view chart, your candle is now going to be based on that time frame. So like I said, every candle here, so this one here is for 1 hour of price action. This one here is for 1 hour price action. This one is 1 hour, this one's 1 hour. But if I go to the 15 minute, or the 10 minute or the 30 minute, for example, the 30 minute is right here. Now each one is for half an hour. Does that make sense?
Yeah. So, for example, you're looking at here. What time frame is this?
This is the 30-minute up here.
So, select candle here. The top of it is the highest that the range went in that 30 minutes, and the bottom is the lowest in that 30 minutes.
Yes, exactly, bro. So,
Okay.
basically, the what you mean is right here. Okay, so every candle is going to always form like this. It's always going to open if you're bullish. So bullish, by the way, for anyone watching that doesn't know, when you are going up in the market, traders call that being bullish, and when you're going down, that's called being bearish, right? So in this example right here, this would be a bullish candle. So a green candle is going up. Now I want to also mention that on my charts, my candles are different colors to that. My candles, the blue ones are the up candles, and the white ones are the down candles. So keep that in mind when you guys are watching this video. The green candle or the up candle for your chart is going to be a blue candle for me. Okay, I've just literally changed the colors, but it's the exact same thing. Okay, so green candles mean it's going up basically because your chart is going to be green and it's going to be red. So anyway, when you see a bullish candle open or a green candle, it's going to open down here, okay, and it's going to close above the opening price because obviously it's going up. So it's going to open here and it's going to close up here higher. Now, like you mentioned before, Bruno, there's going to be highs and lows of each of the candles. So the highest point of the candle is going to be up here, and the highest point of the candle is known as a high wick. So whenever a candle is forming, it is always going to have a highest point, and that's going to be shown on the chart as a wick. So if I go down here, you'll see that every single candle has a wick. So this is the highest point up here, right? This point right here is the highest point of this candle, and that is known as the wick of this candle. Okay, this is a bullish candle. It's a blue candle, so it's a bullish candle on my charts, and it's opened down here. If I actually go and replay price, actually, one sec, I'll replay price like this, right? So here's the bullish candle we're looking at in this example. Price opens down here. Okay, so let me just do this. Price opens like this. So at this point here, then its highest point is up here, like that. The lowest point the candle went to is down here, okay? But it closed here. So basically what that's saying is the opening price was here. Maybe we dropped lower first, but we closed above the opening price, and that is what gives you a bullish candle, okay? Now, same thing goes for a bearish candle or a down candle, okay? I will replay my charts to a bearish candle now, so a white candle on my charts, and it's probably going to be a red candle for you or anyone watching, okay? Price opens here, and because it's a bearish candle, we're obviously expecting price to go down, so it's going to close below the opening price. Here's the opening price, here's the closing price right here, and then the lowest point of the candle is shown by this wick right down here at the bottom, okay? And that is literally the very basics of candlesticks. It's really simple. Don't overcomplicate it. And whenever you're trading, just understand that a bullish candle is going to open and close higher, and the bearish candle is going to open and close lower because it goes down. So, yeah, bro. Any questions about that?
No, I just never understood that. To be honest, like you could kind of follow where it is in general, but I didn't know about open close any of that, honestly.
Yeah.
So
But
it's
does
good.
that make sense now? Like how this one would open here?
Yeah, I would say from the off, do you have a some sort of, or did you have some sort of analogy or something, some way to say bullish bearish? So um red red is a bearish one, right?
Yeah. So yeah,
So
red is
is there a little slogan? Is there a little slogan like bear something so
nah.
it's negative, or bull something so it's positive? You know what I mean?
Yeah, basically, yeah, literally just remember it, right? So bullish means you're going up. You don't even need to call it bullish or bearish. If you want to just call it up and down, you can do that as
Okay.
well, right?
All
So
right.
it's just, there's just going to always be fancy words in trading, but just for now, yeah, let's just call it up and down candles, right? This blue one here is an up candle. This white one here is a down candle. This one's an up candle, down, down. And that is how each candle forms. So if I continue to play out price, you'll see here, this is a bearish
Okay.
candle. It opens here, right? The highest point of the candle is the top of the wick here, and then it's closed below like that. and that is the down candle, right? And the lowest point that the candle went to is this wick right here. So I'm not going to go into loads more detail on that. It's fairly self-explanatory, and I don't want to cover that for too much longer. But now the next thing we need to understand is that there's going to be different strengths from different candlesticks, okay? So, for example, right here, this candle right here, if I replay price back to this point here, this candle has more volume than the candle previous to it, right? Because you can see it's way bigger, okay? Now, that is important in trading because when you see volume in the candles, that's telling you that the move is going to be stronger in that direction. So, for example, right here, the bullish move here or the up move is a lot stronger after seeing this big candle here than it was from only seeing that small bullish candle here, because this shows you there's a lot of buying pressure now into the market because of how big this candle is. So that's what you want to look for when you're trading. If you're going to look for a trade, let's say from a key area, which I'll get onto later, right? But you would want to see strong buying pressure from that area, and that signifies that buyers are in control. And then you would obviously take a buy, as you know that buyers are coming into the market a lot stronger than sellers, and you know that because of the strength of this up candle right here. Okay, so basically, when a candle is really big, that means there's a lot of volume in the candle, and it means that buyers in this situation, as it's a blue candle or an up candle, are really strong in the market, okay, compared to this one right here, which is really quite small. Okay. Now the same thing goes for selling candles, right? The same thing goes for if we're seeing big selling candles to the downside. For example, like this one right here, right? This is quite a big selling candle. There's obviously a lot of volume to the downside now, and then the next candle is likely to continue to the downside because of the volume of its previous candle, right? So yeah, like when there's a lot of volume in the market, it's likely to continue in that direction, and that is probably as far as I'm going to go in terms of that. Of course, like there's a lot more to it, and how to actually enter from these things I'll cover in the next videos.
Mm.
But for now, it literally is as simple as just understanding that in big volume candles like these ones, that is when the market is going to give you that big move, and that's when you want to kind of get into the market. And when you get into the market and you start to see volume coming in to the downside, like we're seeing here, it's likely that's going to continue because of the strength of these candles relative to, let's say, these ones before, where there really isn't much volume, and there's not much volume because the candles here are a lot smaller than these candles here, which are bigger. So, like, does that make sense? Like, just that concept
Yes.
alone? Yeah.
Yeah,
Cool.
100%.
Now, perfect. Next thing as well is going to be understanding the wicks, right? So now we've understood the bodies. The bodies here are where the volume is in the market, right? So you see these big white things right here. That is
Okay.
essentially where the volume is. But the wicks right here, the wicks are really important as the wicks of the candles are telling you if there's a rejection happening from a certain area. So right here, for example, we're seeing loads of wicks right here rejecting from the upside. So this is basically telling us that price is failing to close higher, right? Before I explain this, actually, remember that a candle forms like this. It opens here, okay? Now the candle's going to go up if you're bullish, but if it doesn't close like this and it leaves a wick behind, like it's doing here, right? What that basically means is price came up, okay, to this point here, but then the sellers came and pushed it back down, and it ended up closing like this, leaving a big wick because the buying pressure wasn't strong enough to close the candle with a strong body, right? If you were seeing strong buying pressure in this example, the candle you would want to see would look something like this, okay? Whereas the candle we're seeing is looking like this with a strong wick to the upside, which is telling us that price came up, but then sellers pushed it back down, and it left us with this wick, which is basically what we're seeing right here. These wicks are telling us that buying pressure has reduced, and now sellers came into the market, pushed it all the way back down, and it left behind these big wicks to the upside.
So does that mean that sellers came in when they saw it high, or sellers held and trusted that it would still go down, so it didn't lose, or it lost? Yeah, I don't know. It didn't stay high.
Yeah, what it basically means is that when price came into, I mean, this area here, it's not a specific area, but when price came into this area for some reason, I don't know why, but for some reason, sellers came into the market at this area and they started to push the market lower. And we can tell that because of these wicks here. These wicks basically tell us that sellers are coming into the market, right? And actually, I mean, looking on the 30-minute candle right here, we can see that the 30-minute candle has this big wick rejecting from this area, okay? So I'm going to test you a little bit here. What does this big wick like signify as happening on this candle right here?
Okay, so this wick signifies that sellers are not very strong, because the buyers possibly came in at the bottom there,
Yes.
leaving the body closed a bit, if that's
Yeah.
the terminology.
That's it. That's it, bro. That's it.
Although
So
the trend still is downward, so we've got to look for the next one to see how it continues. But
yeah,
that's a sign that buyers could be gaining strength or
yes,
buying.
bro, 100%. Now that is spot on. So basically, just literally just looking at this candle alone, we can understand from this wick here that buyers are coming into the market, right? Because there is no more selling pressure. If there was strong selling pressure, the candle would have been closing like this to the downside, right? But the fact that we now see this wick rejecting from an area, and that basically shows us that yes, sellers are losing power and buyers are coming into the market, okay? And when you see candles form like this with a really long wick, that is what's known as a pin bar. Okay, so if you want to name this candle, guys, um, this specific candle here would be known as a bullish pin bar. So it's basically a candle like this, which has a long wick to the downside, okay? And that's a bullish candle. Well, it's basically a buying candle pattern. When you see patterns like this in the market with a long wick up to the downside, like Bruno just said, it's a sign that buyers are coming into the market, and that could signify a chance for you to take buys. Okay, if you're looking on the charts and you are seeing candles with lots of wicks from like rejecting lower prices, and you're starting to see price go higher, like we're seeing right here on the 30-minute, that is a bullish candle. Okay, and that could tell you that maybe now we can look to take some buys in the market. Okay, so that is an example of a bullish pin bar. An example of a bearish pin bar would be something like this, where price is going to look like, or the candle's going to look like that, and then we're going to have a long wick now rejecting from the upside, okay? So it's going to look something like that. Basically, the opposite of what we're seeing here. So this would be a bullish example, right? But then something like this would be a bearish example because we've got a long wick now rejecting from the upside, which this tells us that sellers are being strong now, because if there was strong buying pressure, then you would want this candle to close like this, but it didn't. It left a wick to the upside, so that is showing us that on this candle here, buyers are losing strength and sellers have come into the market. Does that make sense?
Yes. Is there a name for that opposite?
Yes. So that would be a bearish pin bar. Let me actually.
So it's also a pin bar, even if the wick's high, even if the wick's.
Yeah. Yeah. So this would be a bullish pin bar, this one, and this one here would be a bearish pin bar.
So you won't find a bearish candle with a long wick at the top. Rarely.
No, so this one here is a bearish candle with a long wick at the top. What do you mean?
Sorry, maybe bullish. So you won't see a bullish candle. It's rare to see a bullish candle.
Yeah,
with a very high wick at the top.
Yeah, exactly. So yeah, it would be rare to see a bullish candle with a high wick at the top, unless it happens to be like like a news candle. For example, this one right here. If we go back to this one, right, this is the one I originally spoke about. This is a bullish candle, as you can see on my chart. It's a blue candle, so this is a bullish candle. But this candle here has a long wick to the downside and a long wick to the upside, right? Because this was a news candle. It was formed by news, So there's going to be
So
long wicks on both sides,
so
basically.
was there was a lot of trading going on in this
Yeah,
period as
yeah.
well?
Like within this half an hour period, there would have just been crazy volume, and you can kind of see that because of how big
Okay.
this candle is, right? But yeah, bro, for the most part, if you are bullish, you're, and if it's a bullish pin bar at least, then there's going to be a long wick to the downside, and probably not going to be a long wick to the upside at the same time. So now I'm going to go back to this example here, which is the one that I originally spoke about, and now it's probably going to make a bit more sense to you what we're seeing right here, okay? This, right? Now, what is this telling you? These wicks to the upside this time. So, yeah, what is that telling you?
There's not great buying pressure.
Yeah, exactly.
Or
Yeah,
buying pressure has been lost by
yeah,
sellers coming in once they've
yeah,
seen it hit the top.
exactly, bro. Perfect. That is the basics of candlesticks. That's what I want you to understand, right? If you can understand that, like that is an amazing start, and that is all you need for this lesson is literally just to understand, guys, that when you're seeing wicks, wicks are telling you that price is rejecting from an area. So we can apply this, and this will be applied in the future videos. But when you're looking to trade from a key area and you're seeing wicks reject from that key area, that's telling you that the key area is going to hold. Okay, I'm not going to show you guys an example of this, but what I will do is I'm going to show you a very basic example of this actually just by drawing out a box. Okay, here's a box on my chart. Doesn't matter what it's called. I'm not even going to mention the name of this box, right? But now let's imagine here that price has come into this box like this. Okay, price comes into the box like this, and now that price is in this box, we start to see some candles give us a rejection with long wicks like this. Okay, we're seeing a lot of candles give us long wicks rejecting from this box like that. Bruno, what would that be showing you is happening from this box?
Buyers are coming in.
Boom. That's it, bro. That is literally it. Buyers are coming into the market from this area. For anyone that was watching this video, you can now very, very confidently look on the charts and not take a trade. I'm not saying you're going to know how to take a trade, but you're going to know how to look on the charts and just understand what's going on, okay? For example, just looking at this random candle here, there's a long wick rejecting from the downside, okay? Which shows you that buying pressure was strong for this candle right here, okay? That is simple for this video. That's all I want you to know. Then you look at this candle right here. This candle is very, very strong. There's a lot of volume in this candle. So what does that mean? It's a lot of volume to the downside, so maybe the trend is going to go lower. That is it. For this video, that is all I want you guys to know. And trust me, when it comes to putting this into practice in the future, this will make so much more sense because like I just showed here, right, when we come into these key areas, which are called demand areas, which I will cover in videos way into the future, but this area is a demand area. Price reacts from this demand area from a large wick, rejecting from the downside, closing as a bullish pin bar, and that shows you that you can now take a trade to target the upside. Okay, that is the basics of this video. Um, I also want to mention as well that for anyone who doesn't even know what website I'm using, this website is called TradingView. Okay, TradingView is where you're going to do your chart analysis. You can download it so you can get it on your browser for completely free. All you need to do is literally search up TradingView, and your chart colors are not going to look like mine. Your chart colors are going to look, like I said, guys, they're going to be uh, like this, right? They're going to be green for up and then red for going down. If you want to change them to look like mine, to be honest, I don't even advise doing it. Don't change them to look like mine yet. All I want you guys to do is just literally watch the next videos in the series and keep on making notes, and then you are going to progress, okay? Now, also, when it comes to actually practicing this, you don't need to practice, okay? For everyone who's watching this, you need to just literally watch the videos and make notes. No practicing is needed. No demo accounts are needed. Nothing is needed until you know exactly how to trade, until you can confidently look at the charts and understand everything that's going on. Okay? Because if you can't, there is no need to open a demo account. So that is what I also want to mention as well. For this episode, guys, and for the rest of the episodes in the series, even on episode 30 or episode 50, however long I decide to go, don't open a demo account. Don't take any trades. Because Bruno was telling me before, he's opened live accounts, you know, you make a bit of money, you get a little bit lucky, maybe, but you are going to
Yep.
lose it because you don't know how to trade. So before you guys, decide to, think, oh, I'm going to go and trade now because I understand candlesticks, don't do it. Don't open a demo account until you know exactly how to trade.
I would say as well. So in my first year of uni, I did open a live account. I invested, and you can predict where the market's going to go even with no knowledge. You can see, okay, it's going up. Maybe it will go a bit further up.
Yeah.
What then comes into play? You still don't understand anything. Even if you do understand anything, Sal's not even talked about yet. It's psychology of taking a trade when you need to, and not when you want to, or not when you just got an inkling. I don't know. This was just think the reason for your colors. Even I would think psychologically, seeing green and red is gonna mess with your head because you're seeing, okay, up down up down. I don't know if that's just to
Yeah.
to to
Yeah.
um to smother that a little bit is the reason for you changing the color, but
Mhm.
that's very important as well, I feel.
Yeah. No, bro, you're right, 100%. Like when it comes to psychology, which I will get on in future videos, you want your candle colors to not be green and not be red because there's a lot of emotion attached to green and attached to
Mm.
red. When you see green, let's just look at traffic lights. Green tells you to go. Green tells you to buy. Green tells you to, this is good, this is good, this is good. But you don't want to have that associated to your trading, okay? Because
Also, sorry,
yeah,
red actually increases your heart rate. Just literally, it
yeah,
does. There's
really
proven to
does.
just increase your heart rate, so you're gonna stress. You're gonna come out. Just also, sorry, where I was trading, I didn't know enough. So that's why you also need to really know maybe not everything, but as much as you can before you start anything. I was on a live account. I wasn't putting TP SLs on my stop losses on my trades. So
Mhm.
I went into a lecture. I started a trade. I was up, let's say 200-300. I got a text saying your equities in got one. I don't know what even the terminology, but your
Yeah,
equities
yeah,
in that in shit. Really, you're about to
yeah,
lose all your money. So
yeah.
do you wanna close? And that was just that may be psychology or just being dumb, but you got to know about all that stuff.
Yes, 100%, guys, 100%. Like all of the stuff with stop losses, how to navigate trading view, I will cover all of that. But as you guys would have seen for this video, you didn't even need to use any tools, okay? This is my toolbar. I didn't use any of these things. I used them to draw out the candles, but you don't even need to draw out the candles. All you need to do is, a bit of homework is look at the charts and just take some time to understand what's going on. Look at this candle here. Okay, there's buying pressure. Look at this. I don't know. Like, look at this wick here. This is selling pressure. Look at these wicks here. This is selling pressure to the downside. That is all I want you to do for this very basic video. Is just understand candlesticks. Understand the market is made of candlesticks, guys. And to be honest, that's kind of it. Okay, the next video I'll be doing is going to be a video about discipline. It's going to be a video specific about how to actually, actually get through this bootcamp series and actually take time to take it seriously, make good notes, and everything will be covered in the next video. And there's so much more which I'll be covering in future videos. Okay, this is literally 0.5%, 0.3% of trading. There is so much more. So stay tuned for the rest of the videos, guys, and I'm going to end it there. Bruno, thank you for being a good, I guess, student. Okay, I'm excited to see your progress, bro, and
Yeah,
I'll see
and
you. I'll see you on the next call. Yeah,
if any of you want to follow along my journey from beginner, I'm going to be making content on this as well, short form on TikTok, and potentially Instagram. I'm not certain where at the moment, but for now, my personal brand is at Bruno Mundi on TikTok or Bruno
yeah.
Mund underscore on Instagram. Potentially we'll have a Bruno FX, but we'll see. We still need to think about that a little bit. Anyway, thank you,
All
Sal. Good
right,
first
bro.
lesson, good start.
Cool. All right, man. Well, yeah, I'll see you guys all for lesson number 3. Make sure to like, comment, and subscribe on the video. And yeah, perfect.